Okay, welcome everybody to our Buying Your First Home webinar. What we're looking to do here today is to try and help educate you for that most daunting task of getting into your first home. It's something that is one of the most important decisions you'll make in your life, and you want to make sure that you actually get it right. So we're here to help you navigate through that. So some of the stuff that we'll go through today is some of the things you can do today that will really help your cause going forward. So in relation to who we are, so we're Electo Finance. We have a team of experienced professionals, and we cover off all different elements of the process of how to actually get into your first home. So we've got many years of experience across many different fields and industries. So we deal with a lot of self-employed people, people in normal sort of jobs, anywhere from high executives to people who work on a factory floor and anything in between. So in relation to who I am, so I've been in the industry over 25 years, and consulting and advising is a passion of mine. So my background has been in finance, financial planning, and also in the property industry as well. So I sort of bring all of those elements together when I'm helping people to make such a critical decision. Really passionate about helping people, because if you get the right advice and the right guidance, it reduces your risk of having regret of not necessarily having that guidance and advice. So this is very much part of what we're about, not only today, but every time we interact with anybody that we're helping with. So we look after a lot of our existing clients. We get a lot of referral business from our existing clients, and we also deal with brand new people that we've never dealt with before. And our passion for existing or new clients is exactly the same. So in relation to the advice and the guidance that we give, we're very proud of our independence. So we're not necessarily aligned to any particular groups. So when you're dealing with us, you're really getting an upfront sort of honest take of what you can do. I've also got formal qualifications as a mortgage broker, also qualified financial planner, real estate agent, and teacher as well. So at least you've got a little bit of an idea of who you're dealing with. So what's the end goal? This is a really important thing. Some people think, yep, want to buy my first property, just want to get in. I think it's really important to sort of work out what that will look like later on down the track. So what I mean by that is you might buy something now and you might go, oh, great, that's awesome, but it may not necessarily help you later on. And what should you get? Should you buy a house so you've got more land and more bedrooms, or it may be further out from some of the hubs of some of the major cities around the country, or should you buy a unit? Should you buy something that's a little bit closer in, and won't have the backyard necessarily, won't have, say, the extra bedroom, but it can be a really good lifestyle choice for what you do? Or should you get an apartment like really in the heart of some of the capital cities around Australia? Once again, it'll be smaller. So restrictive in relation to maybe the space you have within that apartment. However, you might just have some incredible facilities at your doorstep. So deciding between the house, the unit, and the apartment, whichever one that is, always remember at the end of the day, it's your home, and it's somewhere that really needs to be special to live in. And the reason why that's so important is because your first property may end up being used for you to get your second property, third, etc., etc. So when you're buying a property to live in for yourself, I also want you to keep in mind how appealing that particular property would be for people that potentially would rent that property. So, and also the type of tenant you'd like to have in your property. Did you want to, say, a couple that are professionally employed, stable employment, stable income, that are likely to stay long term if it ends up being an investment property? The other things as well, if you do buy a property now and it does turn into an investment property, what are the ongoing costs going to be? So say for a house, it's your property, you've got your rates and your normal sort of costs that are associated with that. The unit, it might be one of maybe 4 on a block. So you then share some of those costs. Or if you get an apartment, you might have an apartment that has a swimming pool, a gymnasium, a concierge, and car stackers, and all these things that are very, very expensive. So that can really impact your ongoing costs for that particular property that you buy. So we can sort of help you work through what that looks like. So we have discussions about those options for you. So the finance process. The finance process is such a daunting task. You'll see a lot of advertising that appears to be simple, quick, jump online, couple of quick, links, and all of a sudden you've got a pre-approval. I can assure you it's not that easy. So some of the things that you can do to really, really help your cause and get yourself prepared to get in the property market starts today. So I want you to keep in the back of your mind that any particular lender that we go with, they're going to look at your spending habits over the last 3 months minimum. They will go through your bank accounts and they're looking for things that you spend money on. If you're buying lunch every day, dinner every night, 3 or 4 coffees a day, you've got a betting account, you're going to Dan Murphy's or BWS every second day. So if you've got gambling, alcohol, a lot of takeaway food, a lot of streaming services going through your accounts, that's really going to impact the impression that you give a particular lender. So a particular lender might look at and say, oh my goodness, look how much money this person's spending. They've potentially got a drinking problem or a gambling problem. And they're just living way beyond their means. So I really want you, a bit of a tough love type of thing, that we really want you to have a budget, and we can help you with that budget. So we have a really good budgeting tool. So we can actually help you to put the information into your budget to work out truly how much you earn and how much you spend. So, and things like, where do you do your grocery shopping? Do you do it at Coles? Do you do it at Woolworths? Do you go to Aldi? Love Aldi. You'll go in, you'll have one particular product, and that's the only product, but it'll be a good product at a cheaper price than necessarily some of the other major ones. So, cooking for yourself, cooking at home, simplifying those expenses to make your 3-month period look really, really tight, and to sort of prove to a credit manager that, wow, yep, these people are living well within their means, and we're really happy about that. And also those that have studied, that have a HECS debt, that HECS debt does actually impact on your ability to borrow. So if you have a substantial HECS debt, make sure you share that with us and let us know about it. So the other thing that to be really wary of is, these really short-term, payment arrangements where you buy a good and it's only going to be for, 4 payments, and you do that regularly to buy things. It might be holidays, it might be clothes, it's whatever. Please do not jump on board with those things. They really, really hurt your ability to borrow money, because the credit managers don't like people that use a lot of that sort of finance stuff. And another thing is your credit file. So everyone has a credit score. So credit scores are normally out of about 1,000. A good credit score is probably around about 700. You may not know what your credit score is, so we can sort of help you to find out what your credit score is. And there are things like paying phone bills on time. If you do have a personal loan or something like that, always make sure your repayments are on time. Because once you start having a credit rating that diminishes, it can take quite some time to actually improve that. So if you have a negative activity on your credit file, it could take upwards of 2 years for that to actually fall off your credit file. So there's a lot of these things that really, really can improve your situation or impact it in a negative way. Another thing is, as well, is your savings patterns. So with that 3 months, they'll be looking at your 3-month savings history. So have you shown the ability to make a financial commitment on a regular basis? So that financial commitment could be rent. You may be paying rent at the moment, or it could be you're actually saving and saving really hard. So we really like it when people have that really consistent savings pattern, showing that money is increasing in your savings. So there's a lot into this finance application process. And what we do, we don't submit your application until you're ready to go. So we will work you through that, and we'll hold your hand to make sure you get there and give yourself the best possible chance to get finance approved. Government assistance. So the government assistance in buying property is quite different across the country. It certainly has really changed over recent times, and most of the grants and the support are available for brand new properties to try and help the construction industry. So we can sort of, depending where you're looking to buy, we can actually help you work through that, because that can be a bit of a maze itself. So if you're buying in Queensland or South Australia or New South Wales, we can help you through that, just to make sure that you are getting what is available to you. And there also can be some discounts on stamp duty and that type of thing as well. So a bit of a minefield, but we'll help you through that. Lender's Mortgage Insurance, or LMI, is the acronym for that. You may have heard of it, you may not have. It's a really, really critical piece of the puzzle to understand. So if a particular lender is going to lend you X amount of dollars, and it's going to be secured by the property that you buy, if for some reason you get into financial hardship and you can't pay the loan back, and the property is taken over by the lender that has the loan, they will then sell that property. And if there's a shortfall, the lender's mortgage insurance will cover that shortfall for that particular lender. So you might buy a property for $700,000, you might have a $630,000 loan, you've fallen in arrears, so you're behind in your repayments, you walk away from the property and the bank goes and tries to sell the property. They may only get $600,000, you owe $630,000 plus legal costs, which would be substantial. So that lender's mortgage insurance will cover that shortfall for the lender. But that's not the end of the story. So what happens then the lender's mortgage insurance will come after you for that shortfall. So the lender's mortgage insurance is a really critical part of the process. And there are some ways where you might actually be able to pay the lender's mortgage insurance monthly instead of actually a lump sum added onto the loan. So we can actually help advise you and give you some guidance here on how to do that. So can family members assist you, and how does this work? This is a real topical point. So in short, if you have, say, a 5% deposit and you have to pay lender's mortgage insurance, which is expensive, a family member could actually assist with, say, an extra 15% deposit. So if you've got 5% and they've got 15, you've got 20% deposit. You then don't have to pay lender's mortgage insurance. So generally speaking, it's a parent or an uncle and auntie or something like that that's really close, that is happy to offer the equity in their property to prop up the extra deposit. So let's say, for example, you need a deposit, 20% deposit of 140,000. Let's say you've got 40,000. They could actually have what's called a limited guarantee against their home for $100,000. So if something happens down the track and something goes wrong, the bank in question could access upwards of $100,000 of your parents' or relatives' property if there's a potential shortfall. But there's quite a bit that would have to happen through that for that to occur. So we will certainly deal with your family member who's willing to assist in that way, and let them know what the things are that are positive and also the things that are negative in relation to that. So it's a really good way for family members to help other members. And that particular guarantee is not going to be there forever. It'll only be in place until you build up equity in your own place by reducing the loan and also the improved value of the property that you have. So once you get 20% equity in your own right, that family member guarantee can actually then be cancelled. those family members predominantly need to be financially sound in their own right. So, they need to have, either, ongoing employment that they're still in, or a very strong, asset base in their own right, because what they don't want to do is put any family members at any sort of financial, distress or that type of stuff. So we'll certainly, help you through that. What to buy, from a property point of view, and private sale versus auction. So if you're buying in Melbourne, Melbourne is the auction capital of the world. More properties are sold via auction in Melbourne than anywhere else. It's just the nature of the market in Melbourne. There are some auctions, interstate as well, but a lot of the interstate, outside of Melbourne are predominantly done through private sale, where people will, advertise a property, and then, people will have a look at open for inspections, and then, offers are then asked, and then sort of a pseudo auction is sort of there performed. So if you're buying at auction, especially in Victoria and New South Wales, you really need to make sure that your finance is in place and ready to go. Because once you're successful at auction, that's it. There's no subject to finance. There's no cooling off period. It's a public auction. You buy it, it's yours. So if for some reason you go to an auction and put your hand up and successful, and then you find out you've got a problem with your finance, then you've got a problem. So any time that you're looking to bid through auction or just through private sale, really need to make sure that you've got your conveyancer on board, and we can help you with introductions to conveyancer. So a conveyancer is a legal person that represents you in this transaction. They'll look at the contract to make sure that the contract is sound, and we'll also guide you through, pest and building inspections and things like that. So, you want to make sure, people buy second-hand cars, they'll spend, $100 on getting it inspected, but people buy a $750,000 property and won't pay, $750 for a building inspector to go through and have a look. So, we will guide you through those things that can really sort of help you, make the right decision. So if you're then, buying, you'll then, you need to put a deposit down. So you need to make sure you've got those funds available. You may not necessarily have those funds available, and there's a thing called a deposit bond, which is a guarantee that they will get their deposit at the settlement. So you might buy a property today, they might settle in, say, 60 days. So a deposit bond is something that, we can organise for you, rather than you actually then, forking out the money on the day. So there's all these sort of little nuances about how to buy property, and we certainly can. And let's get the ball rolling. So I'd really like to thank you for joining us today, and hopefully that sort of, gives you a bit of a heads up about what to do and how to prepare yourself to get into the property market. We're also, we're running, ongoing events and various topics. So we've got another one that's coming up about the property market and what's happening with that. So feel free to join in on that one, and we'll expand a little bit further about what's happening around the country with property, and help you to sort of navigate through maybe some of the stuff that you're hearing in the media. So thank you very much for joining us. Really look forward to hearing from you, and thank you for your time.